So the question of the week is, does having a credit inquiry or taking out any new debt before my closing impact me? The answer is yes, a resounding yes. It has a huge impact, and here's why. The number one question that mortgage companies have is fraud. Is something going on, like are they taking out another mortgage at the same time? So is it a financial inquiry or a mortgage inquiry? If it's not that, which most of the time it's not, then the next question becomes, what new debt did they take out? It's like an investigation. It's like an Easter egg hunt. We're checking to see if there's any new inquiries, and then what has that derived? Is it a lease turn-in? Is it a new credit card? What is going on? So let's talk about that. So let's say you have a new lease coming up and you say, what? I had to turn in my lease and I got a new lease. Well, the payment was $263 and now it's $583. That impacts a couple things. It impacts your debt to income ratios. So we have to get it added onto your credit report. We have to get the proof that your other lease is totally paid off and turned in with a zero balance, because we have to get that zeroed on your credit report. And we have to get that new payment on your credit report. After we have that, we have to update the application and then run all new approvals to make sure that you still credit qualify with that new increased debt. So those are the steps that we have to take. And imagine if that was just a few days before closing or even a week before closing. It's definitely a showstopper. In addition, let's say you go out and you apply for a credit card. If you don't open up a new credit card, we need an explanation letter from you, signed by you, saying that you just did an inquiry, but you decided not to open up a new credit card because you remember that your loan officer, Dawn, told you not to open up a credit card, right? Or you did open up a credit card. And then what's the repercussions there? Did you make a charge? Did you not make a charge? Is it still zero balance? So then with that, we need you to get the credit card statement. Maybe the credit card statement hasn't even been generated yet. But then you have to call the creditor and get proof that it's zero balance. And if it's not zero balance, what is the coinciding balance and the payment? And maybe again, a statement hasn't been generated. So you have to wait for them to generate a statement or give you a letter with that balance and what that minimum payment requirement is going to be. Wow. Right? The reason for that is because we have to add it onto your credit report, update your application, run new approvals, and make sure you still credit qualify. Even if the payment is minimal, it could have a lasting impact on your ability to buy. And it's definitely a delay of game. So no, and no, absolutely not. Do you want to apply for any new credit? And in addition, the mortgage company gets alerts now. So we know up until the day of closing if you've had any credit inquiries, and it is a showstopper for sure. It's definitely a delay of game, and in certain circumstances, it has caused my clients to not qualify for their house if their debt ratios are too close and too close to the limit. On the other hand, maybe you have great credit and great debt ratios. It's still a delay of game because of all the reasons that I talked about. Those 3 steps have to take place whether your score is 808 or it's 602, whether your debt ratio is 32% or 49%. All of those processes have to take place because your application has to match your credit report, has to match everything at the day of closing. So there you have it. That's why you don't want to have any new inquiries, open up any new credit, or have any changes up or down. On the other hand, a lease payment might be going from $563 to $263. And you say, what's the big deal? We still have to have everything matched. So if there's a credit inquiry, we find out that the new payment's lower, we have to have it match. So there you have it. I hope you enjoyed this video. If you found it helpful, share it out to others that might be buying a house. And it definitely depends on where you're at in the loan process. You might be in pre-approval process and your loan officer might say it's okay. The thing is, don't hide it from your loan officer. Full disclosure to them, because they'll help you get it right and figure out what you can do, what you can't do, how to make it right, how to fix it. Because the worst is having a loan officer uncover these things and uncover them at the last minute. So cooperate is wonderful, and open communication is super helpful, because these things like an Easter egg hunt will be found out. Thank you for watching. Have an amazing day and week.